Imagine a world where your electric vehicle charges as fast as grabbing a coffee. Then it takes you, say, 400 or even 500 miles on just that single charge,
Right.
completely getting rid of range anxiety, no safety worries. It sounds like sci-fi maybe, but this isn't just some distant dream. It's the vision QuantumScape, QS, is actively selling.
That's absolutely right. QuantumScape is, well, they're really at the forefront of solid-state battery technology. It's a potential game changer, could honestly revolutionize EVs and maybe even energy storage more broadly.
And today, our mission here on the deep dive is to really unpack QuantumScape's true potential. We want to cut through the noise, the hype and the skepticism,
Hmm.
to ask the big question for you. Is this amazing revolutionary opportunity? Or is it still, largely
It's
speculative?
the key question.
We've lined up insights from QuantumScape's own reports, detailed financial takes from places like The Motley Fool and Ticker Nerd, market sentiment from stock analytics AI videos, even forum discussions on Reddit.
Yeah, we've cast a wide net. Our goal is really to pull out the most important nuggets of knowledge from all of these sources. We want to give you a clear, well-informed picture of what's a very high-stakes venture.
Okay, so to really get QuantumScape's ambition, we first need to understand the problem they're trying to solve, right? The basic limitations of today's lithium-ion batteries in EVs.
Exactly. Limited range is the big one everyone talks about.
Right, then slow charging, sometimes painfully slow, high cost, battery life isn't infinite, and those safety concerns. You hear about EV fires. It's a challenging list.
It really is. And QuantumScape's argument is that just, tweaking the existing lithium-ion chemistry isn't going to cut it. Their solution is a fundamental shift.
Yeah.
It's solid-state lithium metal batteries.
Okay, solid state. But the key innovations go beyond just that, right? Like this anode-free idea. That sounds counterintuitive. Don't you need an anode?
Well, yes and no. It's definitely a radical departure. What they mean is there's no manufactured graphite or silicon anode layer put in when the battery is made.
So what happens?
A pure lithium metal anode actually forms in situ, sort of like right there inside the cell during the very first charge.
Okay.
So you eliminate a major component up front. That potentially cuts material costs, could simplify manufacturing, and, this is key, boosts energy density. You're not wasting space on stuff that isn't actively storing energy.
Got it. More efficient use of space inside the battery. And their proprietary ceramic solid electrolyte, that's the safety piece.
That's the core of it, yes. This ceramic material, they say it's flexible, acts as both the separator and the electrolyte. Now, unlike the flammable liquid in traditional batteries, this is inherently non-combustible,
Makes sense.
and it's specifically designed to block dendrites. You can picture these like tiny lithium spikes trying to grow across the battery.
Right, the things that cause shorts and fires.
Exactly. If they puncture the separator in a normal battery, you get a short circuit, and that's often how those fires start. This solid barrier is meant to stop that completely.
Okay, so on paper, this sounds like a massive leap. What kind of performance are they actually claiming for their first product, the QSE-5?
The targets are definitely impressive. They're talking over 800 watt-hours per liter energy density.
Which means,
For you, it means packing way more power into a smaller, lighter battery. So longer range, maybe lighter cars overall. And the other big one, fast charging. They're targeting 10% to 80% charge in under 15 minutes.
under 15 minutes, wow, that would be a game changer.
If they can deliver it in the real world, absolutely.
But, lab breakthroughs are one thing, getting them to market reliably at scale.
Mm.
That's the hard part. QuantumScape talks about this amplifying innovation approach using an AMP-LFI framework. How does that work?
Yeah, they're very keen on presenting this as a disciplined process. They see innovation not just as eureka moment, but like climbing a mountain, securing each step. So A is for the application defining the EV problems they need to solve. M is for material, that rigorous search that led them to their ceramic electrolyte. P is for process and product. That's where their Cobra manufacturing system comes in.
Cobra, that's their proprietary tech for making the ceramic layers, right?
Exactly. It's designed for continuous flow, high throughput, basically speed and consistency. They claim it's like 25 times faster on heat treatment and takes up 80% less factory space than older methods,
Huge efficiency gains, if true.
potentially. Then L is for launch, getting a minimum viable product, the QSE-5, out there. F is for field testing, which is slated for 2026, getting real-world validation. And I is for iterate, feeding all that learning back into the next version.
So it's this methodical, step-by-step approach, trying to separate real progress from, just hype. making that lab-to-market journey less risky.
That's the idea. Be deliberate, prove each stage.
But even with a great process, you often need serious backing, especially for something this ambitious. QuantumScape isn't going it alone, are they?
Oh, definitely not. They've got some very significant strategic partners. Volkswagen's the big one.
Right, VWO.
A critical partner, major investor. They put in around $380 million over the last decade, hold a 26% voting interest. That's a massive vote of confidence from a global auto giant.
And VW's battery company, PowerCo SE, they're involved too.
Deeply involved. They have a strategic collaboration, a non-exclusive license agreement to industrialize the QSE-5 tech. That includes a $130 million royalty prepayment they already made, plus potentially another $131 million over 2 years for joint commercialization work.
So real money, real commitment there. And I think Bill Gates is a known backer too.
Yes, he's often mentioned as an early supporter.
Okay, blue chip validation. What about leadership? I heard there was a shift there recently, focusing more on manufacturing.
There was. Dr. Siva Sivaram took over as CEO in February 2024. His background is crucial decades, scaling complex tech and semiconductors, data storage. Think Western Digital, Intel.
So bringing in that manufacturing scale-up expertise.
Exactly. It was a clear signal about shifting from pure R&D towards high-volume production. The co-founder, Jag Singh, moved to chairman.
And I also understand QS shifted its whole business strategy, something about being capital light. How does that change things?
This is a really important pivot. Instead of planning to build their own massive gigafactories, which is incredibly expensive and risky,
Right, a huge capital sink.
they've shifted to licensing their core technology, their intellectual property, directly to the big automakers, the OEMs, and other battery makers.
Ah, so they provide the recipe, essentially.
Pretty much. Revenue comes from license fees, milestone payments as tech develops, and then long-term royalties on every battery made using their tech. It changes them from a potential manufacturing giant, which is tough for startups, into more of an IP powerhouse. Think high margins, like a software company.
That's a fundamental difference in risk and potential profitability.
Absolutely. It lets partners handle the massive factory investments. It's a key strategic move.
So, high-profile partners, leadership focused on scaling, and this capital light model. That seems like a smart combination for trying to get from R&D to actual commercial success.
It definitely aims to de-risk that transition.
Okay, so you've got this potentially revolutionary product, strong backing, a smart strategy. The market potential must be absolutely enormous with the EV transition.
It really is huge. Our sources talk about insatiable demand for better batteries. The solid-state market alone, estimates vary, but you see figures like $1 billion in 2023 growing to maybe $15 billion by 2033. That's a 31% compound annual growth rate.
Oh, wow.
Some projections are even higher, maybe $2.8 billion in 2025, jumping to over $33 billion by 2033, and that's not even counting stationary storage or consumer electronics.
So a massive pie to carve up. But QS isn't the only one with a fork, right? Who are the main competitors in this race?
Oh, it's an incredibly crowded and competitive field. You have other pure-play startups doing solid state, like Solid Power. They use sulfides, partnered with BMW for it. There's Prologium from Taiwan, claims mass production already, partnered with Mercedes-Benz. Factorial, SES. They also have deals with major car makers like Hyundai, GM, Honda.
And then you have the existing battery giants. They're not just standing still.
Definitely not. Samsung SDI, Panasonic, LG, SK On. They're all investing heavily. And Toyota is a big one to watch. They supposedly have over 1,000 patents in solid state, hinting at commercialization around 2030, also against sulfides.
1,000 patents.
Yeah. Plus others like Willian in China with NIO, Qingtao, Amsera, TDK. It's not just a race, it's more like a full-contact motorsport. Everyone's jostling for position.
It sounds intense. What about barriers to entry? Is it easy for someone new to just jump in now?
Not easy at all. The barriers are really high. First, the technology itself is incredibly complex. Then there's the intellectual property. QS alone has over 350 patents. Toyota has that huge portfolio. The capital needed is enormous. QS has spent over $1 billion on R&D already. And maybe the biggest hurdle is the automotive validation cycle. It takes years of rigorous testing for car companies to trust and design a new battery into their vehicles.
So that VW PowerCo relationship, the prepayments, that gives QS a real head start there that's hard to replicate quickly.
It's a significant advantage, yes.
And is the regulatory environment generally helpful?
Generally, yes. Governments worldwide support EVs with subsidies. Tax credits like the Inflation Reduction Act here in the U.S., setting electrification targets, that creates a favorable win for the whole industry.
Okay, so huge market, fierce competition, high barriers. It really puts QS's position, the opportunity, and the risk into perspective.
Definitely.
Let's shift gears now to the financials, the cold, hard numbers. As a development stage company, QS isn't profitable yet, right?
That's correct. They are firmly pre-revenue, no steady income stream. They're spending heavily on R&D, around $383 million in 2024, leading to significant ongoing net losses. Nearly $480 million loss for the full year 2024, for example.
That's a lot of red ink, which means they're burning through cash.
Yes, the cash burn is substantial, driven by that R&D spending.
So, heavy losses, burning cash. Normally, that sounds alarming for a startup. How are they managing?
Well, this is where it gets interesting. Despite those big losses, their balance sheet is actually remarkably strong.
Really?
Yeah. As of August 2025, they were sitting on about $797 million in liquid assets, cash, equivalents, marketable securities. Their debt is minimal, very low debt to equity, and their current ratio is quoted as a whopping 16.66x in Q1 2025.
16 times, so tons of short-term assets compared to liabilities.
Exactly. It's what some analysts call a fortress balance sheet. Management believes this cash gives them enough runway to fund operations well into the second half of 2028, maybe even through 2029.
That's a significant cushion. It really highlights the scale of investment needed here. But with no revenue and big losses, how do you even value a company like this? Normal metrics like PE don't work.
They're completely meaningless at this stage. Valuation becomes, as one source put it, an exercise in structured speculation. Often analysts try using discounted cash flow models, but they have to use incredibly high discount rates, maybe 25% or more, to account for the massive execution risk.
So basically guessing future cash flows and then heavily discounting them back.
Pretty much. One model mentioned put an intrinsic value somewhere between roughly $10 and $15 per share back in July 2025, but is highly sensitive to assumptions.
Which brings us to market sentiment. And QS is, well, it's a stock people seem to love or hate. Very polarizing.
Extremely polarizing. Wall Street analyst ratings are usually described as a mixed bag. The consensus is often hold or neutral.
So not a strong buy recommendation generally.
Often not. And the median price targets given by analysts, like around $6.15 in August 2025, or maybe $5 in July, are frequently below where the stock is actually trading. You see a wide range, too. Goldman Sachs had a target as low as $2.50, Baird as high as $11.
But the stock price itself can be incredibly volatile, right? It seems to jump or drop hard on any news.
Oh, absolutely. It's incredibly sensitive to news flow. It had that huge 133% surge from June 2025, was trading around $8 in mid-August, but it hit over $12 just the month before.
And the short interest, I hear it's always heavily shorted.
Consistently one of the most shorted stocks. Figures range from 16% to over 26% of the public float being sold short at various times. That shows significant skepticism from some market players.
But it also means potential for short squeezes, adding to the volatility.
Exactly. And another factor is retail investor involvement. Apparently, a very large percentage, maybe over 75% of the publicly traded shares, are held by individual retail investors, not institutions. That can contribute to the big swings.
And there was some controversy a few years back, right? A critical report?
Yes, that's part of the narrative you have to be aware of.
Yeah.
Back in 2021, Scorpion Capital released a report calling QS a pump-and-dump SPAC scam.
Ouch.
Strong words. Very strong. Remember, QS went public via a SPAC merger. The report alleged misleading or exaggerated claims, saying prototypes weren't viable outside the lab at that time. Now, QS has obviously made progress and released more data since 2021, but those early accusations definitely feed into the ongoing skepticism for some.
So you've got this really complex picture. Strong balance sheet, but heavy losses. Cautious analysts, but a volatile stock price driven by news and retail. Lingering skepticism. It really underlines the speculative nature here.
Absolutely. You have to weigh all these conflicting signals.
Okay, let's try to pull this together. A clearer picture of the risks and opportunities. What are QuantumScape's core strengths?
Number one is a technology leadership potential, that ceramic separator, the anode-free design. It's genuinely disruptive if it works at scale. Strong IP portfolio, over 350 patents. The crucial VW PowerCo partnership provides validation and a path to market. That fortress balance sheet gives them time. And the new leadership focused on manufacturing execution.
Compelling strengths. But the weaknesses, the hurdles, what's the biggest practical challenge?
The single biggest risk, hand down, is manufacturing scalability and execution. Can Cobra, their system, actually produce these ceramic layers consistently, reliably, and affordably at massive scale? It relies on unproven machinery.
So making it work outside the lab in a real factory cost-effectively.
Exactly. Plus, there's still pre-revenue, still burning cash, and the dual-class stock structure limits public shareholder influence, which some investors don't like.
Okay, execution is key. But if they do execute, what are the opportunities?
They're immense. Targeting that multi-trillion-dollar EV market is the main prize. The capital-light licensing model could lead to very high profit margins eventually, like a software business, potential to expand into consumer electronics, grid storage. The ultimate goal, become the industry standard, the Intel Inside for batteries.
The dream scenario.
Right.
And the threats. What could derail them?
Intense competition is always there from other startups and the big incumbents. Technological obsolescence. What if someone invents an even better battery tech? A slowdown in overall EV adoption due to the economy could hurt everyone. And just general macroeconomic factors, inflation, interest rates impacting future funding or market demand.
Okay, standard threats for a tech company, but there's something else, right? A surprising geopolitical factor that might actually help QS.
Yes, this is a really fascinating recent development. A potential tailwind.
What happened?
In July 2025, the U.S. imposed preliminary anti-dumping duties of over 93% on anode-grade graphite imported from China. Graphite is critical for the anodes in almost all current lithium-ion batteries.
Over 93% tariff. That sounds like a huge cost increase.
It is. Analysts estimate it adds about $7 per kilowatt hour to the cost of making conventional EV batteries. But here's the crucial part. QuantumScape's technology, being anode-free.
Doesn't use manufactured graphite anodes.
Exactly. They're immune to this massive cost increase hitting their competitors who rely on traditional battery designs.
Wow. So purely because of a trade dispute, QS suddenly gets a significant cost advantage, or at least avoids a major cost disadvantage.
That's right. It provides a sudden, unexpected boost to their potential cost competitiveness.
Yeah.
It sort of de-risks their path on the cost front in a way that has nothing to do with their own tech progress. It's a fascinating external factor.
That is incredible. So looking at the whole SWOT, including this geopolitical twist, really gives you that balanced view, immense potential but profound risks too.
It really does.
So this deep dive, it just reinforces that QuantumScape is a truly high-stakes investment. It feels like it could have a binary outcome, huge success, or, well, a significant struggle.
I think that's a fair summary. The bull case really hangs on that potentially disruptive technology, the massive market, the critical validation from VW, that strong balance sheet giving them runway, and now this unexpected geopolitical cost advantage.
But the bear case. It really boils down to that huge manufacturing execution risk. Can they actually build these things at scale and cost? Plus the ongoing cash burn while pre-revenue, the intense competition, and a valuation that might already reflect a lot of future hope, making it vulnerable to setbacks.
So as you, our listener, think about QuantumScape's journey, maybe consider this. What single factor do you personally believe will ultimately determine its success or failure? Is it the core technology itself? Is it management's ability to execute on manufacturing? Or is it those external forces like competition and geopolitics?
Something to ponder. Thank you for joining us on this deep dive into QuantumScape. We definitely encourage you to keep digging, do your own research, and form your own informed opinion.
Absolutely.
Until next time, keep digging deeper.